So I'd like to welcome everybody. This is our fourth webinar since COVID-19 has upended our world. And today we're talking about how just like every other area of your business, COVID-19 has brought far-reaching changes in many of the employee benefits related requirements. So today we're going to cover a lot of the basics that you need to know. If you have questions that don't get answered, please type those into the chat session and we'll try and cover those. I am Karen Sullivan, your host today. I'm owner of Sullivan Solutions, and we create practical marketing for executive business owners. So one of the ways we do that is by sharing information that we believe will help make your business stronger. And that can be a variety of information like the employee benefits today, because I believe everything in business relates to marketing, and it isn't creative unless it sells. So with that in mind, I'd like to introduce Victoria McCoy. She's president of Associated Employee Benefits, and she has been focused on the expertise and industry trends in the employee benefits business since 1994. She's a business owner herself, and she continues to consult and provide expert insight in all aspects of employee benefits for small to mid-sized businesses. She specializes in consumer-driven health plans and has a created team of industry professionals who are committed to analysis, effective implementation, purposeful education, like today, and top-notch responsiveness to create peace of mind for their clients. So some of the key points we're going to talk about today is, all right, everything's changing. My world is upside down. What do I have to do now? What's new that I can't ignore? And how do I emerge as strongly as possible? And we've got your questions that you've submitted, we're going to go through. And with that, I'm going to turn it over to Victoria. Welcome.
Thanks, Karen. So it has been a roller coaster since March. We have been seeing things change on a daily basis and dealing with the COVID virus. Some employees had been furloughed and just weren't working during that time. Some industries, they were able to continue to work, and employers had to make decisions on what to do: maintain the benefits, pay the benefits 100%, try and collect the premium when the employees come back. What is it that you have to do? And part of this whole thing comes down to the PPP loans as well, if you receive those, and how do you use the PPP loans as it pertains to your benefits. In addition to other continued changes that are happening to that, the benefits themselves, and then moving forward and starting to head into renewals. And how do those renewals look as we start rounding out the year end and moving into next year? So it's been very interesting. We've been on multiple calls with the various carriers, whether it's medical side, the dental, vision, disability, all the carriers, insurance carriers, have been involved in navigating through this COVID virus and figuring out how to handle things moving forward. I know some of you that are on the call today are clients of ours, and thank you for being on this call. I know we've been answering a lot of questions for our clients as they call in. We've been trying to furnish information to our clients to make sure that they have some updates from time to time. And Karen, I appreciate this opportunity to have the verbal connection and video connection with our clients as well.
And this is a good time to jump in and say this will be recorded and we'll make it available for replay. So,
thank you. All right. So where do we want to start, Karen?
Let's start off with some of the questions. What are the specific changes to the health insurance benefits and costs, the top line stuff that it's, oh my gosh, I can't, don't let me ignore this?
So the interesting thing, there were several changes that happened with our plans during this COVID virus that may or may not continue moving forward. So One of them is that some of the carriers have bundled in their plans virtual office visits with their specific list of doctors. It's usually a telehealth program that is specific to the carrier, so to speak. So it's not a standalone or a separate entity. So what they ended up doing with the virtual visits, regardless of whether you are a traditional style or an HSA style plan, they were covering those visits 100% upfront, no out of pocket to the employee. Then we found that the telehealth virtual visits with your primary care physician. So this is a new thing that happened the last few months, and we see it continuing possibly to the end of the year, where you'll still have access to your own primary care physician, and your own primary care physician will be able to bill the insurance company for that visit. So that's a big deal, and I hope for everybody's sake that that's a continued new innovative way of attaining medical care. Time will tell. We'll see if these insurance carriers will continue it and if the doctor's offices are happy with it. Personally, watching it with my husband, Medicare was a big deal because they were the ones that were the stick in the mud about not having virtual visits. But watching those visits with the doctor's office, I felt like there were better efficiencies for the doctors and for the patient. So instead of sitting in a waiting room for an hour waiting, you got on and waited a half hour for your visit. The doctor came on and it was done. So that was a really, really nice change. Some other things that will continue depending on the carrier. And again, this is kicking the can down the road. Some carriers are covering the COVID testing and treatment at no cost through July, some through the end of the year. It's very carrier specific. I'm not going to get in the weeds on that, but if you have questions as to what your carrier is doing, they are sending information out to the administrative contact of the business. But you obviously can call our office and then we'll give you that information to let you know who's covering to what end. There's just too many carriers to really spell it out and give that information. Those are major changes. One other thing that was part of the CARES Act that really hasn't been spotlighted is the HSA utilization of over-the-counter products. So in years past, and part of the Affordable Care Act, it was changed that you had to receive a prescription, a medically necessary prescription from your doctor in order to purchase over-the-counter medications. So let's just use Allegra or Nasacort or something like that. That had to have a prescription be presented to the pharmacist, and then they could slap a sticker on it and you could use your HSA for that purpose. Well, this is now changed, and it's changed back to the old days. Now you can go pick this stuff up and not have to present your prescription to pick this up. And so in addition to that, I mean, I just want to throw a few things out. Acetaminophen, Tylenol, anti-inflammatory drugs. You can go and pick it up and use your HSA. Cold and flu medicines, those, like I mentioned before, allergy medicines, like I've mentioned before, gastrointestinal medications, antacids, H2 blockers, proton pump inhibitors, there's more. And then this is new to us females, menstrual products, sanitary napkins, tampons, menstrual cramp medication. So that particular category is very new to the utilization of HSAs, and as we remember, it's pre-tax dollars going into those accounts, and we want to encourage employees to make better use of their funds. So I think that was a positive coming out of the CARES Act. One other thing, and I'm going to kind of segue into this, people are asking about renewals right now, and it's very hard to address. And so as we talk about cost, some of you, and you better keep an eye on your billings, some of you are going to see credits, and the credits will say COVID and for a very specific month. So right now, one of the carriers has already posted credits for April premium. Now the credits are somewhere around 10% of the monthly premium. And I have to remind you, ERISA rules apply here. So for those of you that have dealt with the medical loss ratio rebates, if you recall those rebates coming in and you've had to disperse them out to employees, this is going to be the same thing. If your employee contributed 50% of the premium and you contributed 50% of the premium in that month, that refund needs to be distributed out equally, how you've received the funds, how you've debited the employee's accounts. Some employers have actually, for the month of April and May, gone ahead and paid 100% of the premium, and they've decided we're not going to deduct it from the employee's payroll. We're not going to recapture their portion of the premium. And so if that's the case, then as an employer, you could maintain 100% of that refund. We do know that some carriers will be doing these refunds in April or September, possibly later in the year. So we strongly encourage, keep an eye on your premium notices on a monthly basis. And then if you see that credit, then you know it's got to be divvied up accordingly, according to the payroll deduction payments, the employer contribution, employee contribution. So those are some pretty huge tidbits there. We can talk about COBRA here in a minute, so I'll wait to answer the new things that are going on with that.
Let me jump in here, Victoria, and ask a question about communicating with employees, because you've just dumped a lot of stuff that sounds like it's changed. As an employer, what are my responsibilities for proactively communicating this to my employees, or how do we keep up with this?
Well, interestingly enough, for those employees who have actually signed on with the various carriers, especially for electronic explanation of benefits, they're getting a notice through their email. And so in terms of the communication that's coming out to the carrier, or from the carrier to the administrator, it is information that you can forward on to your employees. In terms of the HSA, we're just learning this. And so, you know, digging into these bills, and I'm probably going to step into a new territory, but there is another act that's being worked on right now. It's called the HEROES Act. And it's moving the COBRA needle down the road for people. It's extending some of these things I just mentioned down the road. It's making changes to the PPP loan. And so there's just so much going on, so many changes going on. And my disclaimer is what we've shared today is subject to change tomorrow. And so all we can do is take the information as we're getting it and how it's being interpreted, and then try and get it out to our clients. I mean, what's frustrating is we can send something out tomorrow and the next day it's going to be different.
One of the questions that came across was having to do with the PPP loans. Can we use the PPP loans for the company's portion and the employee's insurance premium both?
So here's the interesting thing. The PPP is supposed to help replace employees' income. So if you were payroll deducting employees' income, that's actually embedded in their income as, you know, part of this program. Now, 75% currently of this PPP loan is supposed to be utilized towards the employee's payroll and benefits, right? And then 25% can be used for essentially what I call bricks and mortar, the overhead expense. We have learned that the House and Senate are looking to change that ratio to at least 60% needs to be used for payroll and benefits, and then the balance for bricks and mortar. I'm not going to do this as gospel. I'm just saying keep tabs with your financial institutions. They're getting that information out to you as to how it's being used. But to sit and say, hey, using, you know, the PPP loan to pick up 100% of the employee portion, stay within those guidelines, right? Follow the guidelines and work very closely with your tax advisor and work very closely with the financial institution that you received that loan from.
So talking about some of the other, you start talking about the loans, the PPP loans, the EIDL loans, the things that we're doing to keep our businesses afloat. On top of all the changes and amidst all the changes that are happening with reporting and the benefits issues, is there anything in here I can be doing to reduce my overall costs as a business right now? You know, if I'm laying off employees, what happens there? What can I do to struggle along?
Yeah, this is again, working with your tax advisors, right? Working with your accounting professionals to figure out where is it in your best interest. I find it interesting in talking to some of our clients that this stay-at-home order, some of our clients were able to have their employees still continue to work from home. And so as a business owner, you start evaluating the employee themselves. And so before going in and firing or laying off or terminating or however you want to call it, you know, a lot of evaluation has to be completed first to figure out, are they doing their job? Are they performing and helping the business be successful so they can be successful as well and receiving increases in, you know, benefits or increases in payroll or those kinds of things. And so that's a heavy evaluation when you're going employee by employee and figuring that out. Is the bottom line being affected because we've got an employee who isn't doing or isn't performing up to the snuff of the company standards? So then the benefits come into play. A lot of times, and Karen, you know this, the first line item is marketing that really gets cut as an employer is trying to cut expense right away. And then the next thing is that they start looking at overhead, you know, supplies, then employees, and typically, especially for the small business, the benefits are almost the last thing to be cut, or at least changed to cut the premium. And a lot of it selfishly, as a business owner, you kind of want the best benefits possible for yourself. But most of our clients, I would say majority of our clients, 99.9% of our clients, are always concerned about their employees and want to provide a high level of benefit to their employees at a reasonable cost. So there are ways to get creative and tweak the plan and, you know, raise deductibles and put reimbursements in place to, you know, help with the offset to keep the premium down. But we always want to do that with caution, and we always want to have our ears to the ground as to the utilization of the plan throughout the year, so that we're not making a decision in an area where it's actually going to cost us more on the backside.
That makes perfect sense. Are there any areas in which the changes in work environment, for example, you've got your workforce now for a large period of time has been working from home, and that significantly changes the workplace environment that they're in. Does that have any impact on any aspect of the benefits package or liabilities as an employer?
I'm not sure in sense of liabilities from the benefit standpoint. It's just tracking the hours and making sure the employee is staying up to speed on their minimum 30 hours per week. We have learned that the insurance carriers are still relaxing the rules as it pertains to that, knowing that employees are still working from home. And we do still have some employers that have decided, hey, you know, if it's working and you're performing and you're getting your work done, go ahead and continue to work from home. But it's very hard to track their hours, and especially if we get back to what used to be a norm, you know, making sure that that minimum 30-hour requirement is in place to allow the employee to maintain, or at least qualify to maintain their benefits. So that's time will tell on that. We're just in a I guess I want to say it's look the other way from the carrier standpoint, just because of the COVID and they don't know where this is going to go.
Well, let me flip the previous question around and say, is there anything from that's emerging as benefits options? You know, we talked about, we want to do the best thing for our employees. We want to make sure that we're all getting through this together, and we're helping our folks do that, and we're retaining the good talent, the loyal talent, and doing the best thing for them. Moving forward, what are some of the things I can consider in the benefits packages, even moving into the next year, if folks are continuing to work from home and have some of these different scenarios?
Well, I think the first thing that an employer is going to need to check into is their workers' compensation plan, and reevaluate it and make sure that it does cover employees working from home and the environment that they're working in. So there's some liabilities associated with that. Another area that some employers take serious, some don't. But you know, there's some more ancillary type products that are more accident coverage driven, or even loss of income, disability insurance. Some employees do get concerned about that, but it can be provided on a voluntary basis depending on the size of your group. That is something that employees, as they're starting to grow in their income and develop more of a foundation with a company, replacing their income if they're out ill is a big deal. Now, we have the COVID virus, right? And putting it in place, carriers may be a little bit more inquiring about what do you know within your group? Have you had a COVID case? We still have clients coming in. We're able to write that business. We're not seeing as much of the COVID virus positive testing as we anticipated. So I think in light of this may be something down the future that if employers don't have this in place, ease your employee's mind and let's at least put something in, whether it's a long-term disability plan or a short-term disability plan. And again, it can be employer-sponsored or voluntary.
Another question that we had come through was, how are businesses thinking about, back to that environment? So we talked a little bit about the folks that may continue to work from home. Well, what about the folks that we're bringing back into the offices? We're bringing them back into the retail settings. How are employers, from your perspective, dealing with that back in the office environment?
Yeah, so this is kind of an interesting area, not necessarily insurance related, but it is related to the safety of the employee, but also the safety of the clients as well. I know our office had to go through a lot of hoops in figuring out what do we have to do to sanitize the office, what do we have to do to put barriers in place to keep or at least make employees feel safe in their own work environment. And so a lot of even in the restaurant business, they've had to put those plastic walls up. We've actually installed those above desks we have a cubicle area for our service staff. And so we have actually extended those walls up to maintain more of a barrier for the employees for safety purposes. Now, with that said, our HR manager did consult with employment law attorney because we had several employees that kind of dug their heels in and said, we don't want to come back to work, we're fearful, we don't feel we're going to be safe. And yet everything that Associated Insurance Agencies has done has been by the book. They come in weekly and do a thorough sanitation or sterilization of the office. And then we have stations where we have sanitizing products around the office that if you've touched something, then grab it, wipe it down. We do have the option of employees wearing masks or not wearing masks, but I would share from our perspective at Associated Employee Benefits, to protect our clients moving forward, we've chosen to do go-to meetings from here to the end of the year with an optional face-to-face meeting on the renewals. So when we start into our renewal discussions, we will give our clients the option. We do feel that the go-to meetings are operating more efficiently and effectively for our employers, because it's not taking so much time out of the day to either travel or leave the desk and be interrupted and get back. It's get on half hour meeting, have your questions, and then we can do a follow-up go-to meeting after that. In addition, so that we provide safety for our employees, we're looking to conduct go-to meetings for employee education meetings. Now, most of you know we have a product called EASE that is the open enrollment platform that we use when employees are re-electing their benefits. So this platform, for those of you that are on this call that are clients of ours, the EASE platform allows us to upload videos. And so for employees that miss these open enrollment meetings, we'll be able to upload these videos, recordings of these employee meetings up into the program, so that these employees that have missed the meeting can actually watch and listen to the questions, and then they can reach out to us later with their additional questions. So those are things that we're seeing as changes happening in the market.
Moving into the renewal season, because that's going to come up and be staring us in the face really soon now, do you foresee any changes in scheduling, or do you expect these processes take a little bit longer because we're doing more online in terms of spreading out the renewal period, or do you feel like it's really going to be business as usual? And
from our perspective, it's going to be business as usual. And disclaimer, we're always at the mercy of the insurance carriers getting their renewals to us in a timely manner. But our job is really to negotiate on behalf of our clients and find the best product, plan, rate as possible. We know there are budgets to work with. We know this has been a tough year. And I want to take a moment to address at this point the actual renewals themselves. So we've been on these calls with the carriers, and they have found a downturn in utilization during the end of March, April, May. And that's, stay-at-home order, non-essential medical care it just wasn't happening. Emergency room utilization was down. And that's kind of the reason why they're looking to do a refund right now. Personally, I probably would have preferred to see that be attached to the renewal and keep the renewal low. But also the COVID cases aren't as high as they anticipated. So we're really hoping this next season that the renewals are not projected as bad as we were thinking when we started heading into this. Again, time will tell. And as a, for lack of a better term, CYA, anytime our state or federal government mandates some type of coverage, so this COVID virus covering that 100%, that was mandated for a couple months. Now the carriers are electing to carry this on to the end of the year, probably because they know it's going to be mandated once the new act comes out. But anytime these mandates happen, we need to realize anywhere from 1.5% to 4% gets tacked on to the premium to cover these things. And so we want to be realistic. Although it's our hope that we have single-digit renewals, we may have to deliver some not so nice renewals as well. So that's kind of what we're looking at moving down the road. Okay, so we're looking at an extension of COBRA, and we're looking at a potential of funding of COBRA through this next act that the Senate and House are looking to approve. And so the extension of the COBRA for those employees who are actually terminated back to March 1st, they're looking at extending the notification and the payment of COBRA an extra 60 days. That's one of the things that's happening. And then another discussion point, and time will tell, this is not in stone yet, this is discussion up at the federal level, but they're looking to possibly fund COBRA for employees who are actually terminated back to March 1st, and funding that COBRA either until they find another job with coverage or to the end of 2020, meaning December 31st, 2020, so a 9-month period of time. So that's something that's in the works. We're not sure how it's going to look on the backside, but that was a discussion point that is happening up at the federal level. And remember, COBRA applies to all employees who work or have employed 20 or more employees, the greater of 20 or more employees in the prior year. So majority of the prior year. So anyone who has 10 employees, 15 employees, it's not going to count there.
Is there any talk of that number changing? And I know some of the calculation numbers changed in regards to
family medical leave.
Yeah.
Yeah. Nothing's been put in concrete yet in terms of that point as to whether they're going to drop it down below 20 employees or not.
We had a few questions about how to decide when to reopen in light of some of the restrictions, and deciding when it's time to close. Some of those things are maybe a little bit out of context here in terms of the benefits, but do you have anything you'd like to add to that, Victoria?
Well, so again, it's really consulting and having close ties with your accountant, tax advisor. Those items, forecasting comes into play, and being able to target when you need to pull back and downsize. That's a hard decision. I know we had some clients early on downsize immediately just because they were a interim vendor between one user, business to business, and they had to pull it back quickly. And for those of us, I'll just call it seasoned business owners rather than senior business owners, but seasoned. Several of us have weathered the storms over the last 20, 30 years. And so some of these things are happening today are not new to us. We've learned to adapt, but there's still new things going on. So I just strongly encourage, get on the phone with your accountant or with your CPA and just have those hard discussions early on and get some projections and forecasting in place.
That's great advice, Victoria. I'm going to do a personal plug here, and before the end of the seminar, I'll put some links out there. Some of our previous webinars, our expert panelists have given some very specific guidance. Kathy Warnick in particular gave some specific guidance on how to do some of those calculations and what to look at as you're making some of these really, really tough decisions. But I think the consensus is from us seasoned business owners, you want to ask, you definitely consult with your those trusted advisors, and we use that term for a reason. So
absolutely, yeah.
Let's see. I think I'm back to the questions. One that I'll take over. How to write the best message to your customers pertaining to your upcoming reopening, and whatever's coming down the pike. How do you communicate to your team? This is where I come back to saying, everything is marketing, because it's how you say it and how you project it. And this is a really, really good time to go back to your mission statement. So I thought I would pull out the Associated Employee Benefits mission statement that Victoria and I worked on a couple years ago. And this is the why they're in business, and this is the benchmark that her team holds themselves accountable to on an ongoing basis. And it's basically an internal document. But when it becomes time to communicate with your customers and actually communicate moving forward with your employees as well, this is the second piece here is the verbiage that we're working together on for associated employee benefits to project how they're putting their message together. So we went straight back to the why they're in business and emphasized we continue to be committed. We are still committed to providing the full service you need. We talk through it. It's, I would say, be clear, be transparent, be flexible, be proactive. But there's a lot of things that you know your customers sort of take you for granted, and so some of these they might not understand how some of these things impact your business. So again, going back to this mission and mission statement, nothing has changed here. That we're still committed to service, but here's some things that are going to change, and we pulled out in a bold. The one thing that's going to change is we're sort of restricting our one-on-one meetings, our in-person meetings. So the viewer can drill down and get more information here, but those two key things, we're still committed. There will be restrictions are the first two things you see. Mm-hmm. But we talk through, hey, business is changing. We, intro with that message, but we're keeping it short and sweet. We're shifting our operations for more effective, longer term, whatever. This is the reason. You have to change some of your business practices, but you also want to make it really, really clear you're not changing why you're in business, and you're not changing your dedication to your service delivery.
Well, it's interesting, Karen, that you bring that up, because that has been our mantra. The one point is the client's at the heart of everything we do. And so it's been really important to me as the business owner to make sure that the staff, even when they were working from home, that there were efficiencies in place and that we connected on a weekly basis, but that the clients knew we were there. And what was so great about this ability to work from home is that my employees could pick up their phones and their computers at 5 o'clock on one day and be operational 8:30 the next morning. And so that comes to a lot of long-term planning with your business as well. You never dreamed that you'd have to pick your phones up and just move them to another location. But that whole sale of voice over IP to me back in 2004, it paid. It took a long time to pay off, but it paid off. And it was business as usual for our clients and our employees to be able to connect with the employees of our clients as well. So, I always learned over time, and it was a mentor of mine that always said, plan for the worst case scenario. What's that worst case scenario? If you could go through your archives of all the things you've been through and then play it out on a board and say, okay, we've been through all this. Now what? What could be the worst thing that could happen moving forward? And so I think our office positioning ourselves with technology, which we have been doing slowly over time, and really positioning the technology, because I think that's where our nation's moving, is more technological business sale environment or transactions. We're trying to stay ahead of that and make sure that we're giving our clients the tools to help them be successful.
And I think that's a really good observation, because your business in particular has always been very focused on that personal relationship and the face-to-face. But earlier, you said because of the electronics processes you'd put into place, you were able to flip the switch, and now you actually believe you're going to be delivering your services much more efficiently, mm-hmm. given the state of business moving forward. So.
Yeah, it's not to say we won't get back to face-to-face meetings, but this is, until we know what's going to happen with this COVID virus, I want to keep everybody safe, not only my staff, but clients and their staff as well.
And I think that's the key thing to come out of any communication that you do, be really straightforward in why you're doing it and the benefit. It's about safety. It's not about hard and fast rules. But it's about doing what's best for everybody. So in terms of the key points that we wanted to get across today, or key information that our participants wanted to hear, have we missed any points, or what are maybe the 3 top takeaways that we should be keeping in mind as we hit the end meeting?
You're asking me that, or our participants?
Yeah, I'm asking you that. I'm not getting a lot of chat from our participants. They're absorbing the information. So
the first thing is really, as we see more federal legislation, these carriers are going to get this information out as quickly as possible, but their legal teams are going to have to review all this and then get it out. So first takeaway is things are going to continue to change. For the time being, we know that anyone who has a COVID-related issue, they're covered for now, depending on the carrier, at least covered through July. Some of you will be covered to the end of December. I would also say that, as we start heading into renewal season, pre-planning is always a big deal to us in terms of ears to the ground. So I would say, as an employer, HIPAA rules apply. I'm putting that in there. But normally an employer will hear what's going on, and that's going to be good communications to us or to the benefits broker to understand that if there are some cases going on, if there are some complications going on, we really need to know about it so we can address this with the carriers moving forward. And then lastly, your employees are a big deal to your company, and taking care of them is a big deal. And so as we start going through, again, the renewal process, what are the hard, fast touch points for your employees? Is it a deductible, or is it keeping the premium low? And that's a big takeaway for me, at least for our clients.
I would like to say thank you very much, Victoria, for sharing all of this with us. I'm going to sit back through this, not only because I have to edit it, because I want to hear it again. And I feel like it was kind of drinking from a fire hose with all the information. But that's kind of life is.
My brain spews.
That is exactly why you are the perfect person to share this with us, because I know you stay very much on top of it. I've got one question here. Oh, yeah, Tim Morris says thank you.
You're very welcome.
Well, thanks to everyone for participating. I will send out the link if you have an interest in rewatching or sharing. And again, thanks, Victoria McCoy with Associated Employee Benefits. And I'm Karen Sullivan with Sullivan Solutions. Thank you.
Thank you, Karen.